If you've been watching the crypto markets lately, you know exactly how stressful it can be. It's a roller coaster. So in this explainer, we're going to break down how you can navigate that crazy volatility, stay strong, and protect not just your money, but your peace of mind.
Let's just kick things off with a number that should really get your attention. $2 billion. That's how much money was just wiped out in the crypto market in a shockingly short amount of time. And we're not talking about paper losses here. This was real cash that just vanished from the accounts of hundreds of thousands of traders.
So what does wiped out actually mean in this world? Well, it's called liquidation. This is what happens when traders are using borrowed money, leverage, and the market suddenly moves against them. The exchange forcibly closes their position to cover the debt, and poof, their account goes straight to zero. It is a absolutely brutal lesson in risk.
So what caused all this chaos? Well, it all boils down to a sudden, violent market shock. It's a classic case of fear taking over and driving prices down at an unbelievable speed.
And just look at the scale of this drop. We are not talking about a small little dip here. Ethereum fell 18%, Bitcoin dropped 10%, and some of the smaller altcoins, they plunged as much as 35% in just 1 week. In a regular market, those are massive moves. But in a leveraged market, they're absolutely catastrophic.
And that brings us right to the heart of the problem, the leverage trap. It's this siren song of getting rich quick that, more often than not, leads to getting wiped out even quicker. Let me show you exactly how dangerous this is. Say you have $1,000 of your own money. If the market dips 20%, it hurts, for sure. You lose $200, but you still have $800 left to fight another day. Now, let's say you used 5x leverage. That same 20% dip completely wipes out your entire investment. You lose everything. You're not just down, you are out. Game over. And this is why this piece of wisdom is so important. So many people are in a massive hurry, trying to take these shortcuts with leverage. But real, lasting wealth, it's built totally differently. It's about slow, steady, consistent progress, not gambling with money you don't have. It feels weird to say, but going slow is, believe it or not, the fastest and most reliable path to getting where you want to go. Okay, so how do you actually avoid these traps? It really all starts with one thing: knowledge. Let's dig into how education can be your #1 defense against fear. You know, when the markets are a sea of red and everyone around you is panicking, your education is your life raft. It's what keeps your head clear. It helps you see potential opportunities where everyone else just sees a total crisis. It is the single biggest difference between panic selling at the bottom and making a calm, rational decision. And listen, a lot of us have learned this lesson the hard way, myself included. You might jump into the market thinking you don't need all that formal education, but it's living through a bear market and actually staying invested that provides the real learning. The secret is to have enough skin in the game to feel the lessons, but, and this is so crucial, not so much that one mistake can take you out of the game completely. Now, a huge part of that education is simply understanding what it is you actually own. Not all investments are created equal, so let's look at the critical differences between crypto and stocks, especially for investors in a place like Pakistan. These numbers are pretty eye-opening. In Pakistan, you've got over 20 million people in crypto. Compare that to only about 350,000 in the stock market. Now, this isn't about which one is better. It's about understanding that these are two completely different worlds, and they should play very different roles in your portfolio. Okay, here's the core difference in a nutshell. Stocks are all about long-term wealth building. You actually own a small piece of a real company, a company that can pay you cash in the form of dividends. Crypto, on the other hand, is all about that high-growth potential, but it doesn't generate income on its own. One is an ownership stake in a business, the other is a digital asset. And to make this super real, think about this. A share of Mizan Bank that you might have bought for 100 rupees has already paid out 80 rupees in dividends over time. That's real cash in your pocket while you still own the asset. Now, Bitcoin might go up 300%, but it is never going to send you a dividend check. It's just a completely different way of making a return. All right, let's zoom out for a second. Smart investing isn't just about picking the right assets. It's also about understanding the bigger economic picture. And right now, there are some really important signals in Pakistan's economy that you need to know about. Take a look at this chart. It shows Pakistan's recent trade balance, and it tells a huge story. Exports were around $2.8 billion, but imports, nearly $6 billion, which was a historical high. That massive gap, well, it creates some serious economic pressure. So why should you, as an investor, care about a trade deficit? Well, it puts a ton of pressure on the rupee. That could lead to devaluation, which means your savings and your local investments buy less than they used to. This is exactly why you need a way to protect or hedge your portfolio against this specific risk.
So, how do you do that? What's the move? Well, one simple but really powerful strategy is to invest in Pakistani companies that earn their money in US dollars. Think about the big IT exporters. When the rupee weakens, their dollar earnings suddenly become worth way more in rupees. Their revenues go up, and your investment is naturally protected from that devaluation. Okay, let's bring this all home. The ultimate goal here for any investment strategy shouldn't just be about making more money. It should be about doing it with peace of mind.
So after all of this, what's the actual game plan? How do you build a portfolio that's resilient, one that lets you sleep at night even when the markets are going completely wild?
It really comes down to these 4 pillars. First, just avoid the temptation of high-risk leverage. Seriously. Second, invest in your own education before you invest your hard-earned money. Third, know exactly why you own every single asset. Is it for growth or is it for stability? And finally, keep one eye on those big economic signals because they affect everything. And that's really the final thought I want to leave you with. An investment that grows your portfolio but keeps you up all night stressing, that's not a successful investment. The real goal is to build your wealth on a solid foundation of knowledge and strategy so you can reach your financial goals without sacrificing your well-being along the way. Thanks so much for joining me.